Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you've all had a fantastic Friday. The weekend is upon us. This week, we've been delivering some extremely important updates, which would have helped you sort of figure out what's going on right now. We've maintained our stance that the Dixie, the dollar, is really the chart to watch. And not only have we given you the chart that you need to be watching, and you could essentially take a long or short based off of it. There's that much of a correlation between the Dixie and Bitcoin, and of course Bitcoin and the altcoins. But we've actually given you the reasons for this, and this is going to be a chilled out video as it's Friday. I'm going to try and keep it short and sweet, but I say that often and then we end up at like a 23-minute video. This won't be that, hopefully. But what I am going to do is essentially do a little bit of recapping, look at where we are. You know, yesterday we did sort of alert people that, look, in my opinion, the next down leg has already started. Whether you get a bit of strength before that capitulation or continuation of the sort of broader downtrend is, you know, up to the markets. But in my opinion, yesterday when we were looking at things, we were saying, and we were looking at the total 2 and the total 3, and we were actually showing you that, look, if you take Bitcoin and Ethereum out of the equation, you've already spilt and you've lost this grind line, this support that's been holding you for over 100 days now. If you go to the total 2, you've just about broke it. And now if you go to the total, you have broke it. So the altcoins in some respects, being a little bit more skittish, or almost sort of not setting the direction, but sort of giving you warnings in the direction that things are going. And you need to be, as an investor, as a trader, a cross-market analyzer. And that's what we're trying to teach you guys on this channel. Amongst other things, loads and loads of crypto education coming out within the next month. So watch out for that. We've got something like over 100 videos that we're set to release. So stay tuned on that. We're going to be really educating people on crypto, because regardless of the price, this technology continues to get adopted and continues to get built out and actually advance. And there is going to come a time where the market conditions will not be as they are. And we've continued, and we're going to, in this video, bring up a tweet from Lynn Alden talking about market conditions and talking really about the fact that debt is now needing a hell of a lot more money to service it. And this is set to continue, and at a sort of unprecedented rate, because we've never been so leveraged. And I've said this countless times now. I've had brilliant guests on the show to talk about it. We potentially are looking at the end of the debt-based system as we know it, because it's kind of got out of hand now. And what way does it go from there? So let's not waste any more time, guys. Let's start by doing a bit of TA. I really want to start with a Dixie. I gave this chart yesterday on my Twitter. If you're not following me on Twitter, guys, head over to @RealAllInCrypto. Okay? Because I do a lot more timely updates on there as I'm just going about my day. Also updated my Patreon members with the fact that I believed that this was going to spill. This, in my opinion, was squeezing. Let's see if we can find the tweet, actually. Yeah. So we were saying, look, this is going to squeeze to the upside, and you need to watch Bitcoin for downside. And you can see not only did it break this sort of capping trend line, but it actually found support off it and bounced. That as a trader, is what you want to see, and kind of gave people probably the confirmation to go long. Could come back for another retest. The problem is, if the dollar starts to rip like it is, you're going to see that continuation in the sort of broader theme of things. And I actually expected, I'm not going to lie, I found it very hard to position over the past couple of weeks, or really since this move has been happening, because there is definitely the... I think it's a hard time for investors and traders as a whole right now, because there's definitely the precedent, I should say. We don't want to talk about the president. For the dollar to have a continued rest period. It's an absolutely fantastic. Things just don't continue to go up vertically. But the real question is that now? And you need to basically trade off the back end of that. This is why this chart is so important. You have squeezed. We were looking at this and we were saying, look, and videos are all up there, guys. This was this week. We said, if you stay below here, look for that downside. If you come back and actually hold it, where did you come back to here? No, one thing you'll learn when you start to really dive in and become a chart analyzer, a market technician, is that things aren't random. Okay, there are some capitulation freak events like black swan events, which even still the precursors for them are there, just like with March 2020. And when we've spoken often about how, even if you look at September the 11th, 9/11, the precursors for that market spill, not the event, were there because people were already moving money out at record rates. You had record shorts opening and a whole load of other things in terms of volume taking place. So markets, in my opinion, are the answer to many, many things, and not markets per se, but charts, because they tell you everything you need to know. You're viewing the most important thing here when you're looking at these, and to really understand that is going to give you an edge over everybody else. hopefully you guys that watch this channel day in, day out are there now, or at least getting there and you know, going to continue to grow with me and this channel. So the Dixie going to the upside, obviously we've seen the reaction that we've had for crypto. Just to bring up the total 3 again, which excludes Bitcoin and Ethereum, these are draws from yesterday, guys. We said not only did you break this, you came back up, you failed to hold it. So what's that telling you? This trend line has held. You're actually failing to hold it. Not only are you failing to hold it, what was support is now acting as resistance. Textbook TA, guys. You're coming down. Maybe you get some sort of a bounce here. Potentially, we were short yesterday and did very, very well on a number of shorts. Give some cracking shorts to my Patreon members. You know, we were looking at Uniswap yesterday. And of course, that was the result. That's just a day trade. But ultimately, you know, I think this market is really set for that next leg lower now. Now, it may be a bleed out. It may be some sort of free capitulation. I want to warn people that there's lots happening next week. But next week, it is the earnings for the stock market or some big players in the stock market. The stock market right now, so just looking at this chart and how you broke this grind line, we're suggesting that there's more downside. And you can see how you're following here. You know, your smaller cap altcoins are leading Bitcoin. There's some alpha to be had in that, by the way, guys. And I don't mean leading in terms of setting the direction, giving you the signals to go, okay, look, you know, maybe this is the direction things are going in. But the stock market's earnings are out, and the stock market's at this kind of real key level, in my opinion. This is, of course, the S&P. We have said previously, you know, as long as we don't get above here, we're betting on that downside. I honestly believe, and this is why I want people to be so careful, that we're really just waiting for that 2008 catalyst. That we're just waiting for this. And I think that's very much on the horizon. And when I said that I think the next leg lower has started, doesn't mean it had to happen instantly, but I think that the sort of works were set in motion for this to happen. And we've done lots of TA. We even explained the whole concept of grind lines and sort of trend lines and which ones you want to be more aggressive on and not so aggressive. That was in yesterday's video for anybody that missed. So it's going to be very, very interesting to see what sort of takes place. This, in my opinion, is set for downside. And is going to continue. And I don't really think you're going to get buyers here. And I think when we look at the overall situation, you know, the Fed's hawker sees a lack of progress on inflation, expects aggressive rates. So the Fed is still going to do what they're doing. Let's just break this down very simply. Why is this so crucial? Well, there's only a set amount of money out there, guys. We know they continue to print it. Sometimes it happens in stages. Sometimes it happens continuously, like from 2008 really onwards up until recently. But there's only really so much money there. And the thing is, like, if you have, I don't know the best way to explain this. What I'll do is I'll just read Lynn's tweet and then really explain this in a little bit more detail. So over the long run, if $30 trillion in federal debt refinances towards 4.5% rates, that trends towards 1.2 to 1.5 trillion in annual interest expenses. So that's how much that debt that the Fed owe is going to have to, you know, what the cost of that debt is going to be to service. It's a huge increase. That's taken money from elsewhere. Not only are they not printing money, they're not buying up the bond market anymore. They're actually having to, you know, get money in order to essentially fulfill just the interest on the debt that they've already taken out. So this is to the tune of $1.5 trillion. This is annual. Now, remember, that is just the Fed. What about private debt? What about corporate debt? You know, you could maybe run that up to 4 trillion potentially. And then that is just the US. So what about the UK? What about Europe? What about all the countries in Europe? What about countries elsewhere? What about, you know, the Asian markets? What about Australia? What about Canada? You know, this is what I mean. And I've been trying to, you know, if you have liquidity, and we drew it kind of like a stream, but you could draw it more in this kind of circular motion. And you've got, you know, the Fed over here that kind of add to it, but they also create debt. This is kind of liquidity or an economy, and you've got maybe assets, you know, and you've got whatever else it may be, you know, commodities, you've got food prices, whatever it may be. This is the sort of money that's been spinning around, and the more the Fed add here, the larger this bubble gets, and the more money goes into these. The issue is now, instead of them pumping money into this, they're not doing that anymore. So, you know, there's not really that sort of higher price action to sort of cause further price action. In regards to assets, you've got a lot of that money that's being drained out now going into commodities. And all of this that had a small payment trickling off to debt has massively increased its sort of flow of liquidity into debt. And this is just a US specific case, guys. We're probably talking 20 trillion that is now needing to go and service debt markets. And that's being generous. This is why we're seeing the sort of panic that we're seeing. And the thing is with this, I was listening to somebody this morning who was essentially saying, we haven't, okay, what essentially you've seen thus far in markets is positioning. People preparing for the worst and markets being forward looking and trying to navigate that. You haven't actually seen that, the recession, if that makes sense. So you haven't actually seen unemployment go through the roof or actually start to really sharply rise. We're still at record low unemployment. That's set to turn. And this is a really bad diagram, but I'm just trying to sort of, if this is liquidity, these lines, essentially you've had the Fed that have now cut this off. Debt payments are significantly higher. So liquidity is being drained from everywhere. And this is what the Fed try and do when they up interest rates, because what they're essentially saying to you is, we are going to up interest rates to make things more expensive and money less sort of free-flowing to bring prices down. Jerome Powell himself said, we are going to bring demand, in line with supply. That's how they do it, through essentially making debt more expensive. You also have inflation, which is killing the masses off. Until this stops and we see some sort of a change in this, and we'll be straight on it on this channel, then we maintain our thesis that we don't really want to be an investor. You have insane rates priced in here. Until we see some sort of climb in some of these charts that we look at, we're happy to stay sidelined and ultimately, try and preserve our wealth as best as possible, which for me and my community has been US dollar stable coins. So hopefully that and that really messy draw sort of really brings home the gravity of the situation. And remember, we've not had long to even, adjust to the conditions that we're under. We're already seeing the UK market fall to pieces, huge scares with Credit Suisse, or supposed scares with Credit Suisse and Deutsche Bank. If this continues and actually gets worse, in my opinion, it's kind of simple to say, well, surely the conditions get worse with it. Surely markets go down with it. And that's kind of where we're at. And really what I wanted the bulk of this video to be about. We've done TA. We've done a lot of it this week, looking at the dollar, looking at everything. What I'll do is I'll recap and then I'll love and leave you. Potentially, you may see a bit of a further sell-off in the stock market. The futures looks that way. The FTSE's down, gold's down, the dollar's absolutely ripping there. The kind of precursors for more downside with the stock market. I would suggest that there's actually going to be even more sell pressure added as people will want to get out of the way of potentially dodgy earnings next week. This is probably going to lean on the cryptocurrency market. And we're just on this cliff edge here, guys, ready to fall. We have areas of significance that we're looking at. And I think altcoins are largely leading the way. So stay safe out there until the macro condition changes. We don't change our stance that I think right now is about preservation. And if you want to day trade or if you want to trade, you're welcome to do so. Make sure that you can do it, though. There's no point in just losing money. And if not, just preserve your wealth and really wait for that golden opportunity that I think is not too far off, in my opinion. That is all I've got for you in this video, guys. If you've enjoyed the content, like us, always appreciate it as a comment. And I look forward to seeing each and every one of you in the next YouTube video. Have a fantastic Friday. See you in the next one.